Welcome, dear traders. On Wednesday, stock markets began with a cautious trading. In the Asian session, stocks and currencies displayed muted trading, mainly due to the Fed chief's speech. Yesterday, the US stock indexes closed Tuesday's trading session in the green and recorded the longest winning streak for the last 2 years. Notably, the fourth quarter corporate earnings reporting season is still underway. In addition, investors continue to look for hints about possible interest rate decisions by the Fed. Another scenario to consider is that the US economy may slip into recession. Last week's US job market data showed a sharp drop of 35,000, and this report indirectly confirms the threat of a recession. In addition, Chicago Fed President Austan Goolsbee said yesterday that the soft landing of the US economy was still in question. Against this backdrop, further rate hikes look dangerous, which is why the dovish sentiment in the markets seems to have intensified. They suggested that US interest rates have already perked. Against these prospects, risk sentiment has improved. The Nonfarm Payrolls data for October pushed the US dollar into bearish territory at the end of the last week. The greenback remains there now. Despite weak attempts to grow, its price against the G6 currencies stabilized in a narrow range of 105.50 and 105.60 at the beginning of Wednesday. It consolidated near 105.60 in Asian trade. The next support levels are 104.80 and 104.40, and the greenback may face major resistance at 105.97. From the technical point of view, it serves as a level where the price may face selling pressure, reverse, and begin a bearish decline. This week, the US dollar strengthened amid the uncertainty and contradictory market expectations on the US interest rates. In addition, the fact that the US Treasury bond yields were also able to recover their recent losses and support the greenback. Before Jerome Powell's speech, which will be held during the US session, we should not expect spikes in the US dollar's quotes. The majority of currency strategists anticipate that the recent weakness of the greenback will not only persist, but will last until the end of the year. While the US dollar has yet to rally, it continues to trample on its currency basket partners. In particular, the Japanese yen is suffering amid the Bank of Japan's ultra-soft monetary policy, and this situation is not expected to change. A weak yen is one of the peculiarities of the Japanese economy that makes it possible to generate high profits. However, this only applies to overseas companies, while domestic businesses face higher costs for imported commodities and suffer from the deteriorating situation in key markets. Nevertheless, the Japanese Manufacturing Sentiment Index jumped to 6 in November. This shows that business confidence in the world's third-largest economy has improved for the first time since August. In addition, Japan's foreign exchange reserves reportedly increased for the first time since July, rising slightly to $1.238 trillion in October. The government also reported that the Japanese authorities have not implemented any intervention in the forex market between July and September 2023. As long as the dollar-yen pair is trading high, the possibility of intervention remains. And the yen has been rising steadily for 3 days in a row and has already tested 105.75 today, and the pair's momentum is indeed muted in anticipation of further developments. During the Asian session, the pair traded within the range of 150.30 and 150.80, alternating between consolidation and growth. A return to 151 seems possible. On the other hand, the psychologically important support at 150 appears to be protecting the dollar-yen pair from an immediate decline. The Chinese yuan performed even worse than the yen this year. A widening yield gap with the other major economies and an uneven recovery depreciated the yuan by 5%, making it one of the worst performing Asian currencies. People's Bank of China Governor Peng Kongshen told a financial forum in Beijing that authorities would prevent the overvaluation of the yuan and one-sided bets on the currency. The regulators' promise helped the Chinese currency stabilize a bit and even strengthen slightly in Wednesday's trading. The strong yuan has also boosted the antipodium currencies. The Australian and New Zealand dollars often act as a liquid proxies for their Chinese counterpart. As a result, the Aussie soared slightly in the range of 0.6422 and 0.6451, closing the Asian session at 0.6444. In addition, the Aussie found support in risk sentiment and rising oil prices in early Wednesday trading. However, the bullish momentum in the Aussie dollar pair is weak. The Australian currency may pull back from the resistance level above 0.6450. Against the backdrop of all of the factors, the New Zealand dollar also tried to strengthen. As a result, the Kiwi finished the trading session on the upside in the area of 0.5935. However, its price range of 0.5923 0.5943 remained unchanged for the third consecutive session. The US dollar will determine the Kiwi's further movement. And that's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below. And see you soon.